This is Viva Fry.
I'm Dr. Peter McCullough.
This is Tom Luongo.
This is Chuck Prodnick.
This is Alex Kreiner.
Hey, this is Brad Wall.
This is JP Sears.
Hi, this is Frank Peretti.
This is Tammy Peterson.
This is Danielle Smith.
This is James Lanci.
Hey, this is Brett Kissel, and you're listening to the Shaun Newman Podcast.
Welcome to the podcast, folks. Happy Monday. How's everybody doing today? Happy Thanksgiving to all you lovely Canadians out there, all the listeners here. Happy Thanksgiving. Hopefully you got to spend some time with some family and enjoyed the weekend. For those asking about my back, I went to an osteopath, and I tell you what, on Tuesday morning, 20 solid minutes to get out of bed. It was rough. And where I sit today, I hopped right out of bed. I don't know, 2 seconds. So shout out to Janelle, who was working on my back, because I tell you what, I feel pretty good this morning. Happy Monday to everybody out there. Happy Holiday Monday. And, I hope everybody's feeling as good as my back right now. Now, to start off today, silver, gold, bull, okay? Precious metals. I think I'm just going to start doing this every episode. I got their chart pulled up. Gold at, 56.30. That's Canadian dollars. 56.30, okay? All you got to go do is check back on the charts. A year ago, 36.54 to 50, what did I say? 55.74, 56.30. Sorry, there's the updated total. Okay? Or I can do the same thing for silver. A year ago, 43.04, and where we sit, holy crap, today, 70.10. Once again, all Canadian. So precious metals, if you are interested, down in the show notes, there's ways to get a hold of Grahame. He can answer any questions you have around buying, selling, storing, or using your retirement accounts to invest in precious metals. Silvergoldbull.ca or .com. Go look at the charts for yourself. And any purchases made, just make sure to reference the Shaun Newman podcast. Bow Valley Credit Union. Buying and selling Bitcoin has never been easier. Bow Valley Credit Union has developed the first in Canada Bitcoin gateway. Not to mention, as far as I know, they're the first bank in Canada not to demonize you for thinking about Bitcoin. Yeah, I mean, it's just wild here up north. They basically, you can link your Bitcoin gateway account is linked to your traditional PVCU bank account, enabling seamless on-ramps and off-ramps between fiat and Bitcoin. And you little tech expertise or knowledge of blockchain required. Just go to bowvalleycu.com for more information. That's down in the show notes as well. Profit River. Yeah, there's a whole bunch of stuff going on with guns, and when you want to find out the latest and the best selection, how about Profit River? They're based out of Lloydminster, folks, which is super cool, but they also ship everywhere in Canada. They're the major retailer of firearms, optics, and accessories. They serve all of Canada. They got their Customer Appreciation Day coming up October 25th. Rod Gildtaka is going to be in town for that, so if you want to meet him in person, he's going to be on site here in Lloydminster October 25th. October 26th, we got Chuck Prodnick, Jamie Sinclair, and Rod Gildtaka going to be doing a little bit of fun at the shooting range here in town. And Profit River is supplying all the ammunition for that. Reach out to me if you're interested. Just shoot me a text. Any purchases you make at Profit River, make sure to use coupon code SNP. That gets you in for the monthly draws. Just go to profitriver.com. They are the major retailers of firearms, optics, and accessories, and they serve all of Canada. Windsor Plywood here in Lloydminster. If you've got any project on the go, and you need some wood, maybe you need some character wood, stop in and see Carly and team, whether we're talking mantles, decks, windows, doors, sheds, the list goes on, podcast studio tables. Yeah, these guys have the character wood. Stop into Windsor Plywood here in Lloydminster today. Cornerstone Forum 2026, we're just buttoning up things. I know I assume you're getting annoyed with me. But, we announced last week Alex Kreiner. Today you're going to hear Vince Lanci is coming. And we're just buttoning up things so that when we hit the ground, we're running, not dealing with any issues. So I would think that's coming shortly. But I know you all hate, or I hate, all the shortly, soon, everything. This has been months in the working, and we are very, very close. But, hey, Alex Kreiner announced he's coming. Vince Lanci, he's coming. There's others that are going to be on that list. Looking forward to having them all in person. And I look forward to the Cornerstone Forum returning. You may recall my conversation with Drew Weatherhead last year. I was like, oh man, am I going to do this again? And then he gave me the pep talk. And I was like, yeah, you're right. I don't know. What is that? What is that, Shaun? Well, it's back. I'm excited that it's coming back. We're at the Westin Calgary Airport Hotel this year, and I think that everything being on the same site will be really interesting. 24/7 shuttle service from the airport. So if you're flying in, we're just trying to make it easy on you. It's going to be easier on me, and looking forward to that. That's March 28th in Calgary. So mark your calendars. Tickets will be going on sale very, very soon. And I look forward to when they unveil. We got some other things that a guy should bring up. October 14th, so right away here, I guess that would actually be tomorrow night, is the Health Charter Tour. Sean Buckley, the world's greatest health show in Lloydminster, 7 p.m. at the Legacy Center. October 18th, the Prairie Rising Forum in Regina. October 25th, 26th, is Rod Giltack in Lloydminster. On 26th, we're at the District Fishing Game Association Indoor Range. So if you're, once again, interested in that, shoot me a text. This is crazy. The S&P Christmas Party, December 20th at the Dueling Pianos back in town. I got one table left. That's it. So if you've been sitting there waiting, dragging your feet, I got one table left. The Mash Bill, the first mashup community event, a little curling bonspiel, January 17th in Kalmar, just west of Leduc. We got less than 14 teams available now. So if you're interested in doing a little curling with us, make sure you get on that. You can showpass.com/mashspiel. Cornerstone November 22nd, Quick Dick McDick live in Lashburn. That's a fundraiser for the Lashburn Playground for the elementary school. I'll be in attendance. Quick Dick live on stage. That should be a fun night. If you're interested in getting tickets for that, reach out to me. I can send off the link to anyone. And then the Cornerstone Forum, once again, March 28th. I'll keep reiterating, March 28th, baby. We're back. And excited to be back. If you're listening or watching on Spotify, Apple, YouTube, Rumble, X, Facebook, make sure to subscribe. Make sure to leave a review. Make sure to do all the things. You're enjoying the show, share it with a friend. Happy Holiday Monday, folks. Yeah, another week of the SMP. I'm excited to be sitting here and looking forward to the week ahead. Now, let's get on to that tale of the tape. Today's guest is a managing partner at Echobay Partners, overseeing the strategic direction in trading and investment. I'm talking about Vince Lanci, so buckle up. Here we go. Welcome to the Shaun Newman Podcast. Today, I'm joined by Vince Lanci. Vince, thanks for coming on.
Thanks for having me. I'm happy to be here.
Now, I had Alex Craner on last week, and he was the first guest announced for the Cornerstone Forum 2026, which was, I swear, I did not plan that out, and I did not plan this out either, but I'm like, heck, you're on. I might as well bring it up. March 28th, Cornerstone Forum returns, and Vince Lanci, who was supposed to be there this past May, will be there in person in March. So I'm excited to have you in Calgary at the Cornerstone Forum, Vince. I think that's going to be exciting for not only myself, but a lot of people as well.
Yeah. And I'm happy to be there again. I'm sorry that I couldn't make it last time, but I'm excited to be there. I have friends in Calgary, and I'm an oil person by training. So it's always, you want to go there for the rodeo or whatever's going on, but it'll
be a rodeo March 28th. No worries, with guys like yourself and Alex and others going to be in attendance.
I'm sure. I love the behind the scenes, like round table type of stuff you had going on. That was really a good idea, and I feel like I missed out not being there for that. So yeah,
well,
I want to do that.
All in good time, sir. We'll have you here. Now, the thing I want to start with is here in Canada, me and a friend were having this chat. This is exactly for the audience. This is how this starts. Me and a friend are having a chat about, like, what can we guarantee in the next year in Canada, right? Like, trying to just figure things out. And we just agreed on one thing, and that was our money is going to be worth less in a year's time compared to what it is now. And that led us down the road. Okay, so where do you put your money? Precious metals, Bitcoin, and I'm sure there's others. And I guess that's why I'm like, wow, why don't I just reach out to Vince? Why don't I bring Vince on to talk about, this printing money thing, and whether or not we're correct in our assertion that, you know what, your money is going to be worth less here in Canada.
Right. So the world has to print more money. So the world has too much debt. And because the world has too much debt and we don't have the wherewithal to have earnings, we need to retool our economies. Now, I'm speaking about the U.S. generally here. But the problem is for Canada, comparing Canada to the U.S., is the problem for the rest of the world and the U.S. And that is owning the global reserve currency, which is some mystifying thing, gives us a license to print without having to worry as much about the value going down precipitously. It'll go down, but slower and over a long period of time. And the reason, I mean, the what's the global reserve currency? Like it's some sort of a label. No, it's not. It's not a literal label. What it is we cut a deal in the 70s and other deals that made it so that you had to have dollars as a country to buy oil, and oil is the thing that you buy the most of repeatedly. We're not talking about buying something that you buy once every 10 years, maybe gold, you buy once a year tops, you could do it with wheat, food, right? Winter wheat, Canadian wheat, US wheat. But the problem is wheat grows different in different parts of the world. Oil is oil, no matter where you are. And oil is used all the time. And so the US cut a deal with the Middle East, the Saudis, and said, we're going to buy all of our oil from you. We want to make sure all your customers use dollars. And so now every country has to have dollars. What we did was we put every country in the world on a dollar standard. So we went from a gold standard, not we. Every other country in the world went from a gold standard to a dollar standard. So you can't print money unless we print money. Because if we don't print money today and Canada does, well, then you will be able to buy less dollars with the Canadian dollar. It's all about swapping the currency into the dollar. And that's what we've done. We've created a franchise that means all roads have to go through dollars. You want to buy oil? It's Canadian dollars for American dollars. Now, okay, Canada's got a lot of oil. Well, who are they selling the oil to? Right? The economies that are pumping out more. And they're using dollars for that. So it makes it harder for you and other countries to print money to ease the debt burden, which comes with that. When you print money, you create liquidity that eases the debt burden. So it's kind of like if I owe you $1 million and I can print those dollars, I could just pay you the dollars. I could just print them out and pay you. And what that does is if you're not aware of what I'm doing, because you're not aware of what the U.S. is doing, you could just tell that. We can print the dollars and it'll take a long time for you to figure out. So with the world having to spend, just to make it make sense, Japan has to spend on domestic military, right? Europe has to defend themselves. We're pulling out of NATO. Canada, I think Canada is actually in a good place, a good place because it has natural resources, and despite the verbal abuse by Trump, just he acts like a 4-year-old sometimes. Canada is really in a good place, I think. But I know there's other issues that you're dealing with there as well. But Canada as a brother to the U.S. has essentially the same military. Canada doesn't have to spend like Europe does. Canada doesn't have to spend like Japan does. My point is this: the Canadian dollar will weaken against the U.S. dollar, but I think the Canadian dollar will probably get stronger against the yen, Japanese yen, which is easy to talk about now, and the euro. And I say that because, I'm kind of like changing gears here, but I'm talking myself into buying the Canadian dollar and selling the euro because the euro is not really a real money. I'm going off the rails. Everyone's currency is going down. That's the bottom line. And so your buying power is going to shrink, period. Everything's going to get more expensive.
But you just said something there that is interesting. Everybody's dollar is going down.
Right.
But if you're talking about swapping the euro for the Canadian dollar is going to go down less than the euro dollar, is what you're saying.
I think, yeah, I do. I think. Would you like me to elaborate
Yes,
on the
please
rationale?
do.
Okay. Um, we're not talking, I mean, we can talk about Europe is disintegrating, Europe sucks, Japan, the currency's going, we could do that. And I could give you all the reasons for that. But I want to zoom out into like a very simple geopolitical, global way to look at this. The world was horizontally linked. Trade went left to right, the and supply chains linked the world. So us to China, right? So when COVID happened and those supply chains were disrupted, and it became obvious to the Chinese and the BRICS that the value they bring to the table was being undervalued, they started to raise prices or slow down deliveries or make it harder for us to get things. Rare earths would be a good example of that. So what do you have to do when your own supply chains are threatened? Speaking for the US here, well, we have to reshore those things that we can. We need to start making stuff here. We need to onshore those supply chains that we can. So reshoring is stuff that we did before that we have to do again. Onshoring is stuff that we didn't do before that we have to now do. And we have to friend shore. So economically, whereas I used to get a what do you call it? A Dole pineapple fruit cup that was packaged in Latin America. That the pineapples are from Hawaii, and that the plastic is from Indonesia, but it comes through Florida. It's not going to be like that anymore. The supply chain will be, pineapples aren't a good example, but let's do. You guys have a caramel candy there that I loved. Is it called Macintosh? I think.
God, Macintosh caramel? I do we, folks? Somebody's screaming at
hard
the radio.
It's like a hard candy, almost like a peanut brittle without the peanuts. I don't know. I used to love that stuff. Someone would bring it back for me all the time. All right, so something that's uniquely Canadian, let's use clothing was a big example in the 80s and 90s, right? Clothing. We used to get all of our clothing from France, and that supply chain broke. It did. And we started getting it from Canada. And so Canada got to sell more goods to us at the expense of France. So you do it with wine in California. I guess what I'm saying is, as the world deglobalized.
Sorry. I just looked it up. Macintosh's Toffee by Nestle. I had no idea.
I love that stuff.
There you go. I didn't realize that was called. I'm the Canadian here, and I'm like, is that what it's called? Anyway.
Yeah. I used to date a woman who had friends in Canada, and they would just send it to us by the truckload. And it was like this hard toffee, and you'd get this big thing. You'd slam it against the wall to crack it, and then you just eat it. It's great. It's peanut brittle without the peanuts in it.
My apologies for interrupting. I just wanted to make sure somebody's screaming at a radio somewhere right now. And you were right. You were right with the name. I had no idea. Carry on, Vince. Carry on.
Oh yeah. They should all send you some of that now, and then you can send me a bar. All right. So the world's, just to wrap it up, right? The world's deglobalizing. Everyone's friendshoring and onshoring, and so what ends up happening is, in a world that's becoming less complex, shorter supply chains are important. So we're going to get more things from Canada than we did in the past. We're going to get less things from China. So supply routes are going to be shorter, and that's going to boost your economy. Here's an example that's easy that everyone can wrap their head around. Argentina. Milei becomes president or prime minister or whatever he is in Argentina. What does that do? Well, it makes them friendly with the U.S. If they're friendly with the U.S., what does Argentina have? Oil, a little bit, natural gas, some, and lithium. They have tons of lithium. And so that's what we are, like Elon Musk is going around shaking hands with Milei because we're being buddies with them because we want their lithium. We're going to cut deals with them. They're our supply chain. So that's your friend shoring. We're going to get more oil from Canada. Like I think the oil patch, Alberta, Calgary, that area is going to probably have a boom because we're going to be buying less from the Saudis and more locally. So what I'm saying is that Canada doesn't have to beef up its military like Europe or Japan do. Canada doesn't have to onshore natural resources. It has them. What Canada has is a neighbor to the south who claims, U.S., that we're going to be building manufacturing again, which means we need more energy. There's going to be more energy deals cut with Canada. They have to be. They have to be. So I think the Canadian dollar will weaken against the U.S. dollar, but I think because Canada is natural resource rich and the United States kind of needs them like as a feeder of raw materials so we can get our economy going, that Canada is in a good place. It's kind of like we used to go to Canada and chop trees down. The French did when they were up there. And so then they built houses in Illinois. It's the same idea. I think we need you a lot more than we let on. That's it.
How much does leadership play a role in this? And I guess I'll just give you more of that thought. I look at if you had Pierre Poilievre, a conservative in there in the government, right. I'd be like, yeah, I think we're going to, like what is Daniel Smith talking about? Getting more oil out of the ground and more pipelines built and everything. But what is Carney? And he's playing this interesting double speak of, we need to really do a whole bunch of infrastructure projects and build Canada and blah, 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 blah. But like, there's a whole bunch of bureaucracy hoops to jump through to ship you guys more oil, or at least from the surface, that's what it looks like. So when you have leadership that is pushing for a green agenda and trying to move away from oil and gas, how much will that affect your thought process on, well, the U.S. is building more manufacturing. They're going to be bringing all these things, which means they're going to look to the north and go, hey, we need more of what you have. Ship it to us. If our country is standing in the way of that, do you think, oh, no, they're going to get out of the way? They're going to find a way to make it happen? Or are they going to cause problems with that thought process through regulatory hurdles?
Yeah. I think, this sounds like a cop-out. Both happen, and it's a longer process. I'll give you a real example. There is an offshore oil rig company called Sable Offshore or Sable Onshore. And they were owned by, it might have been Exxon, it might have been Chevron, but they spun off. And they spun off because they were an offshore. I want you to think of Canada as the offshore oil rig in this conversation, right? So Sable Offshore Oil is off of off of California shore. And California is very left, very progressive, and very green. Okay, so I have been watching the stock for a year, suggested to me by a young man who has a site called Contrarian Corner, and he really understands this business. I'll plug him later on, but I want to stay on this focus here. These guys are sitting on an ocean of oil that's cheap, like real cheap, like $15 a barrel cheap, $11 a barrel cheap. And they can't get it out because of the green agenda, which you're taught. This is speaking directly to what you're saying, right? And
yes.
Over the last 2 years that I've been watching this company deal with it, they had to do some real things. They had some leaks, they had to get their pipelines, they had to upgrade their safety equipment. But what happened was, and this is the scary part for Canada as well, is that at first you had very what's called green leadership that did not want to expand oil at all. So under Biden, the left was even more emboldened. That's when the Keystone Pipeline, they shut that down. Like that was moronic. That was just people acting with confidence that they should not have acted. It was moronic. Like at the moment that was happening, I was looking at, we're about to go to war over natural resources with the BRICS, and Saudi Arabia is pulling away from us, and OPEC is hating us, and we're shutting down a vital growing pipeline because we're protecting a spotted owl or something like that. That's like the old Pacific Northwest problem. Okay, so this is what happened. So Sable jumps through all the hoops. Everything's fixed. Can we open now? California says no. Right? Then they go to court and they have the ruling overturned, and Sable's now going to open up. And the leadership, these are the words that were said to me. The leadership of the party is now on the side of getting this cheaper oil. California's tax revenues are going down. We need money, right? And they got the CalPERS pensions. They have a lot of money there. And the courts ruled in this company's favor. And the stock went from 12 to 30, one of those it's over. We get to pump oil now. And Trump was in office. So my conversation with my friend was, Trump's in office. At the federal level, there's no roadblocks. How about the state level? Well, and this is what he said to me. He said at the state level, the roadblocks are easing, but these people are embedded like ticks at the mid level. You can't get rid of them. And it's like the lower courts thing you heard about with Soros. The lower courts will say no and throttle you until you get all the way up. And so sure enough, the stock went from here to here to here to here to here. And I got off the roller coaster because I didn't understand it anymore. I was involved for a while. But I think Canada has the same thing. You have so your question is really about, does the leadership matter? And I think the leadership does matter. But the problem is, and this is another conversation altogether, the deep state that we refer to is essentially bureaucracy. And the bureaucracy is hired and populated. The bureaucracy is like a union worker, even though they are union, an auto plant in Detroit, right? You've got a bunch of, middle-aged, balding white dudes who smoke cigars, and you can't get anything done there because they have the union. Well, it's the bureaucracy in government is the left's version of that, Archie Bunker union guy. Same idiot, same dogmatic mindset, thinks they're right, can't count to 20 without taking off their shoes, but have been led to believe that they're right. They've been empowered. I'm right. I'm beautiful. I'm this, I'm that. And so, to your question, in the U.S., the leadership doesn't matter. I mean, it matters. Trump matters. He's different, but it's still a hard road to hoe. What little I know about Canadian politics is it's parliamentary, right? Everything's a coalition. You can't get anything done there. I got to think if Trump were the Prime Minister of Canada, it would be harder for him to affect change there, whether you like it or not, versus here. So I think that you have a bigger bureaucratic, blockage than we do. And so what happens is, this is why Trump's right. Trump makes fun of the leadership in Canada. He's softening it up because we do need your oil and you do need to sell us that oil. Like if I wanted to press you, like if we were playing poker, what do you buy from us? What do you buy from us? Let's pretend you all buy microwave ovens. I'd stop selling them to you. I'd stop selling them to you. What do we buy from you? Oil? I'd stop buying it from you. I'd just stop buying it from you because your leaders or the current bureaucratic left-leaning leaders in the world think their shit doesn't stink. They think they're right. It's the Davos mindset in Canada. It'll be okay. We'll just give people money. That'll cure the inflation. No, it won't. You need to feel the pain. It's like people need to feel the pain, not the image of the pain. And to feel that pain, you need to have businesses feel that they can push back against government and do something about it. I don't think everyone's in enough pain yet. That's sad. And until they are, whether it be from someone like Trump forcing the issue, which is what he does, or whether it be someone like Trump or whoever succeeds him, is, you know what? We're not waiting for you anymore, Canada. We're going to invade. I'm going to make it up. We're going to invade Venezuela. We get their oil. We don't care about you anymore. Venezuela becomes our Iraq, right? Argentina becomes our Israel in Latin America. Canada, you're just our border up top. We're not going to get invaded by Russia until it goes through you. Like, we've got, like, I mean, I'm not a politician, but geopolitically, we've got to have a come to Jesus moment with the Canadian leaders. And you know what? Even though we have more to lose than you in this transaction, because we're a lot higher on the horse economically, we're more diverse, and we are the global reserve currency. So I don't like the Canadian dollar against the US dollar, because I think the Canadian bureaucracy and the Canadian left-leaning mindset is more entrenched than it is elsewhere. But when I look at the Canadian dollar versus the euro, and I go, at some point, Canada and the US are going to get this shit straightened out. And Europe's got nothing. Their currency's not tied to their bond market. They're not pulling natural resources out of the ground, and they've got to spend, $5 trillion on their military. They've got nothing going for them. Like, Europe is going to become, I think, if you look at the globe again, Europe's going to become a buffer zone between Asia, Eurasia, and the Americas. And eventually, Canada wins by default. Now, it doesn't make anyone feel good, but you should start raising your prices on Macintosh to me. That's what you got to do, right?
If you come back, just to finish this off, you told me the example of Sable being off the coast of California.
Yeah.
So the scary part of that is they jump through all the hurdles and still haven't been able to do what they should be doing.
Yeah.
If I look at that, you have Donald Trump, who's very pro-energy. We need it. But you have the state in California saying, nope, we don't want that dirty oil, or whatever they're saying. And on the flip side, here in Canada, you have a premier in Alberta, Daniel Smith, who's very pro-energy.
Right.
But a government it's inverse. And the government is signaling everything green. We need to be green. Everything's got to be green. Right?
Right.
So the fear there is that leadership really could impact this. The thing you're pointing out with Donald Trump, especially in power, is he could pull some levers on Canada that make us feel the pain real fast.
Unfortunately. Yeah. Unfortunately.
And as I couldn't agree with you more, people don't move from a place of comfort. It's always when they're getting uncomfortable that things start to change real fast.
That's the right way to put it. People don't move from a place of comfort. That's right. That's totally it.
If I go back to my first question, Vince, if you're sitting in Canada and you're watching your dollar buy less and less, it's becoming less valuable by the day. Mm-hmm. And if I go in a year's time, I go, well, I think the place to go is precious metals, Bitcoin. Those two things seem to make more and more sense day by day.
Yes.
Do you agree with that train of thought? Like when you look at gold and the price that it's just like soaring to, you look at the price of Bitcoin, you look at the price of silver. Like, are you like, yeah, that makes sense?
Yes, it makes sense. Let's start off. I'm not telling you I want to go out and buy 10% of their net worth in gold at $4,000 an ounce. I'm not doing that, right? And I don't think you're doing that either.
No, not whatsoever. No.
But I think if we're talking about a 5, 10, 15-year timeline, then I'm not selling product other than my intellectual capital or lack thereof. I think you need to, if you save money every week, the reason you're saving it in cash is because it's liquid, because it's easy. You've got to take an extra step and take $100 a week, $100 a month. I don't care what it is. And you've got a dollar cost average into precious metals. That's what I think. And crypto, if you understand it and you're prepared to deal with the risks associated with it. And I mean, by crypto, I mean Bitcoin. Okay. I understand crypto, but Bitcoin has a path to being like gold in many ways by default. When there's no gold left to buy, people are going to start buying Bitcoin. It's going to be like, I'm going to put my money in something that's going to save me. But to come back to the point, gold's not up because of inflation right now. It's not. Gold's up because it had been artificially repressed for decades by the U.S. because it was protecting the dollar status. For some reason, well, not for some reason, Russia and the BRICS have decided that we don't want to hold treasuries anymore. Now, there are various reasons for it. Always worried about the debt, always worried about the money printing because we can cheat and get away with it, as you and I just talked about. But the thing that pushed them over the edge was when we confiscated Russia's money. We confiscated Russia's treasuries in our SWIFT system. So we basically, whether we had the right to do that or not is irrelevant. It was done. And so anybody who's on that side of the world going, treasuries give me 5% and they're backed by the feds, the U.S. military, and they're very convenient and liquid. It's like an ATM on every corner. Gold, it's cumbersome. It's not that convenient, but it's mine and it can't be stolen from me. Shit. I'm going to take 10% of my treasuries and put it in gold. And gold goes up and I go, I'll take 20%. And they keep doing it. So gold has appreciated not because of inflation. During the inflationary peak of like 21, 22, gold was on the way down. Gold made its low in between April and October of 2022. It retested the lows, before the Russian invasion of Ukraine. So gold is not a reliable short-term hedge for inflation. And I'm telling you, gold is not up because of inflation. How do I know that? Because the dollar is up and gold is up. So how does that make sense? It makes sense because they literally want the gold instead of treasuries. And so I'd say to people that are looking to protect their wealth, without having anything other than my portfolio talking, that the inflation hasn't hit gold yet. Am I predicting $20,000? I'm not one of those guys, But I think that we're going to average probably 3 to 5% inflation over the next 5 to 10 years. If things go well, it'll be 3 to 5% U.S. inflation. If things go poorly, it'll be 5 to 10% inflation. And what I mean by that as an American is if we get our manufacturing together, if we get things done, then we're rebuilding our industrial base. And when we rebuild the industrial base, we're going to cause inflation that hopefully will translate into productivity. So AI is another conversation, but it's related to that. I'm going to spend a lot of money up front to build a factory. I've got to buy wood, I've got to buy steel, I've got to buy concrete. That's inflationary. Factory gets built, and then I'm making things that people want. And it's like, okay, now we've got productivity. The inflation is going for something. But if we misstep, and this is where I get a little bit doomy, and I mean this, if we misstep and Trump doesn't get done what he wants to get done, and I really don't see how he can. I don't see how he can. Factories don't grow on trees. I know that we're building all these databases, but there's a difference between building the build it and they will come mindset. Who's going to buy from us? They're not our friends anymore. They want to buy from China now. The BRICS are setting it up that way. So my concern is that, to give you an analog for your older viewers, either this is in the US, I guess Canada, it's definitely Canada too. Either this is 1973, where gold was the best performing asset in 73 and 74, but 74, 75, and 76, the economy took off for different reasons. So we got inflation that created productivity, or this is 1977, where the productivity never comes or turns down back then, and the inflation keeps going. And we got the stagflationary event from 77 to 82. Okay, so my prognosis is we've got a 20% chance of doing what Trump's trying to do, which, if he does it right, Canada benefits. If he doesn't do it right, Canada doesn't benefit. And that could be Canada's fault because of the difference in leadership. It could be Trump's fault. We don't know. The other 80%, and here's the other 80% of my mind, is we're going to have at least 2 years of stagflation. That's my opinion. And when a government is faced with stagflation, everyone's getting fired and prices are up, they always choose the inflation side. Let's get them working again. We don't care about high prices as long as they're working. And that's what happened in the 70s. So I believe that in 2 of 3 scenarios, you need to own a hedge for your currency debasement. The first scenario is you need to own a hedge. You need to own a hedge for stagflation. The second scenario is you need to own a hedge for outright inflation. Let's lower the rates more because we can't keep the economy going. We're in a stagnation. And the third scenario is we have a big growth spurt. That's a 20%, and gold will be good for another 2 years. So I think the smart play is to put in money on a monthly basis or a weekly basis or a regular basis and just have it be automated if you can. Even if you, look, as a person who trades financially as well as physically, I want, people need to buy physical. But if you can't buy physical every day or every week or every month, then put it in something every month, like a 401k concept. And then you should also have physical as well. You have to have physical. I think that there's an 80% chance over the next 5 years that we will, napkin math here, that we will at least experience some stagflationary fears. We're seeing the inflation right now. Silver, close to all-time highs. Copper, all-time highs. Gold, all-time highs. And yet we don't have new inflation in our goods. Why is that? Because we're buying all these metals to make electric grids, to make factories. Gold is up because gold's saying, you know what? We're going to have inflation again in a couple of years. So that's where I stand. You need to buy something that's going to, it's the old story. You need to buy something that's going to hedge your exposure to currency. And you guys have exposure to dollars as well as to Canadian dollars. That's it. You need to buy something.
You need to buy something.
You need to buy like Canadian stocks. You need to, speaking simply, sell all of your Canadian bonds. I'm not saying that. I'm just being very moronic about it. Sell all of your Canadian bonds, put 60% of your money into Canadian stocks, 20% of your money into, 50% into Canadian stocks, 15% into oil companies or oil assets, 15% into precious metals funds, and what's that, 30, and 20% into physical. Like that's what I think. That's what I'm pretty much doing on the American side. I own nuclear. I own nuclear. I own precious metals, and I'm about to get back into oil. That's where I am.
One of the other questions I was going to ask on gold specifically was confiscation. Whether or not a government will come in and try and, like Bitcoin is an interesting one because Bitcoin, they have made it exceedingly difficult. And I give a lot of shout outs on the show. Heck, they sponsor the show. Bow Valley Credit Union here in Alberta has gone the other way. They've opened the portal to allow people to buy Bitcoin through them. And that's an unusual thing for a bank in Canada. When it comes to gold, do you ever foresee, I don't know, the U.S. or Canada or either one of us, I guess, where you could get to a point where all of a sudden they're like, listen, you can't hold physical gold anymore. No, we're not allowing that. Right.
All right. Nothing is 100%, but I'm going to say no. No. Confiscation won't happen again in the Americas. It won't. And I'll tell you why. For a couple reasons. One, our politicians have gotten a lot more Machiavellian and manipulative. Back in the 40s, when was it confiscated? Like 35, 33?
Yeah, in the 30s sometime.
Right. So when they passed the order to confiscate gold, that was, to use the expression, ham-handed, heavy-handed, ham-fisted, completely bungled, and all they really did was they drove the gold underground. Now, I'm not advising anyone to lie if the government says, we want your gold. I'm saying they won't ask for it. They don't do that anymore. They now, and this, by the way, is what you do if you're a left-leaning politician. You never tell people the hard words. You never say you've got to take your medicine. You say, well, we'll check back with you later. Okay, so how does that translate into gold? And I'm speaking about the United States here, right? So, and this is what we're going to do. We're going to do what we've learned how to do, and that is the one thing the U.S. does better than anyone, because of its financial dominance, is it knows how to redirect money. It knows how to redirect funds. So in an armed country, if you were to tell people you wanted their gold again, you'd probably cause a panic. If you did it, and the only way you could do that without causing a panic is we had to be at war. Like, you'd have to be a patriot about this. And we don't do that anymore. So here's what I would do if I wanted to. And by the way, this is what we're doing in Bitcoin right now. Why don't we start with Bitcoin? Then you'll see what's going to happen in gold. Let's start with Bitcoin. What is Bitcoin to the U.S. government? Right? Whether we made it or not, that's another conversation. But what is Bitcoin to the U.S. government? Well, it's capturing liquidity from the dollar. People want to use it as a currency. It's competing with the dollar, and money, our money, needs to be the most dominant money in the world. So what are we going to do? Let's ban it. Doesn't go away. Let's demonize it. Doesn't go away. Well, all right, then let's embrace it and co-opt it. And how do you do that? You do that by starting a spot ETF. And the spot ETF, because we have so much of the world's paper wealth in our citizens, they start to put money into it. So now, instead of the U.S. trading 5% of the world's volume of Bitcoin, we're now trading 70% of the world's volume of Bitcoin. Whether it's real Bitcoin or not, I don't care. That's not the point of this. The point of this is that the U.S. creates liquidity venues, futures contracts, and ETFs to corral the interest. We corral the interest, and we get it on our platform, and we get it in our product, our ETF, our COMEX future in 1974. And when you convert people from, I need to have Bitcoin on my own little key fob, when you get them to say, I trust the government, I'll put it on the IBIT ETF, you convert them, you corral them, you mark them, you tag them, you CUSIP them, you get them to rely on convenience and laziness instead of authenticity. That works. They did it in 1974, and they crushed gold after the 80s using that methodology. Don't buy gold, use the exchange. It's easier. Don't do this, do that. And it's in the WikiLeaks email that says, let's create the gold futures contract to off-ramp physical demand. And it worked. And they did the same thing with Bitcoin. So whether we made it or not, I don't care. At some point, they said, this is too important to not control price-wise. Now we come back to gold. Will they confiscate gold? No. And you're seeing why they won't do it right now. While you and I and our friends may be buying more gold coins, we're in the minority. The majority of the wealth in the U.S. demographically is in the boomers and some of the Gen X like myself, right? Well, most of us are addicted to the financial asset. You see all the money going into SLV and GLD? That's money that's not going into coins. As long as you're below the radar, they don't care about your coins. Because if they ever cared about it, they're not going to go after you. They're not going to say, Shaun, give me your gold coins. They're going to go after your dealer. They're going to go after your dealer and say, you're now regulated. You now have to report your taxes more efficiently. The government in this era does not like to tell everyone to do something. It likes to distribute. ETF, get all the Bitcoin people in. COMEX futures, get all the gold people in. So what they'll do this time is they'll essentially QSIP the gold. Metaphorically, they'll say all of your dealers have to take licensing tests. They'll create bureaucracy. All of your gold dealers, and then they'll start buying the coins themselves, and they're restricted. What did they do with guns? You get all the guns you want for the last 20 years, but how come ammo got so expensive? Because the U.S. Department of Treasury started, the IRS started buying bullets. Homeland Security, which doesn't have guns, bought bullets. Like you you slowly, like a frog in a pot, generationally get people off of the thing that you're trying to control. And they're not going to confiscate gold. I mean, knock on wood, because they're not going to be successful doing it, and they'll only cause a panic. They're going to influence it from the top down. Now, everything I just said, you're with me on that so far, right?
Yes, I am.
Now, let's tie it with the Canadian government. The left thinks, and the right too, but for this conversation, the left thinks that the woke stuff is working. As slow moving and as dim-witted as they are with energy, they'll be that slow with metals too. They'll be that slow with gold too. You'll hear an announcement one day. We're thinking about this. I mean, look at what Europe did. We hate crypto. This is like Lagarde. We hate crypto. We hate stable coins. And now we're going to have our own cryptocurrency. Like, we're 4 years into that, and you could still buy Bitcoin in Europe. You're going to see them coming a mile away. Don't let confiscation risk, which is tiny, and that's if you comply, be the reason to not hedge your financial future. Confiscation risk is a no-brainer. They're too savvy, they're too smart, and they're going to figure out some other way to take it from you, tax you or something on it.
One more question before I let you out of here.
Yeah.
Silver shortage. Your thoughts?
Yeah. I'm sorry. Say it again.
No. Just your take on this. Like, what's your thoughts on this idea of a silver shortage?
Oh yeah. There are measures of, without getting into too many of the details, there are measures of silver that say that there's a shortage of silver. And so you would basically look at the price of silver in futures, which is the U.S. mostly, right? It's all over the world, but it's the U.S. we look at. And they're trading in a way relative to the actual physical spot that is distorted. And the distortion says that we're running out of silver. And it's not the tariff stuff, although that could come back. It's not the tariff stuff with Canada. It has to do with London. There's plenty, I'll just put that to rest. There's plenty of silver in the U.S. We're just not making it available to London. And so London is in a short squeeze. I guess a better way to look at it would be oil. Oil, right? Alberta and Saskatchewan, right? We talked about this before. Alberta and Saskatchewan. They both have light, medium, and heavy oil. I know that you know about that stuff. So let's say that Alberta and Saskatchewan, let's say Alberta has a problem with their oil. They don't have oil. Or let's just say, what's a province next to Saskatchewan or Alberta that has no oil?
Well, they all have oil, but Manitoba would be the next one to the east of Saskatchewan. British Columbia is to the west of Alberta.
So all right. So let's say Manitoba has no oil, and Saskatchewan has the oil. Manitoba is dependent on Saskatchewan, right? Okay. But Manitoba sells a lot of oil. So Manitoba is the COMEX, selling a lot of silver. Manitoba sells a lot of oil. They use a lot of energy. They have a lot of factories, whatever. They're burning a lot of oil. And they get it from Saskatchewan. Well, for some reason, Saskatchewan can't deliver. It turns out Saskatchewan has run out of oil. So the price of oil in Saskatchewan explodes, and Manitoba doesn't have any oil. And so they have to get it somewhere else. And so they start going to other provinces. They go over them and go, hey, Alberta, can we have some of your oil? Or Newfoundland, they start calling Newfoundland up, give us some of your oil. And while that happens, there's a short squeeze in Manitoba because they need it. But there's plenty of oil out there. It's just not local. It's like it's become a regional product. There's plenty of silver in the Americas. Pretend that Mexico doesn't even exist for this conversation. There's plenty of silver in Canada and the US. And the squeeze is London, which had been part of the supply chain. Silver goes through, it's a supply chain. Silver comes out of Mexico or Canada, Canada has its own refiners. Let's say Mexico takes its silver out, sends it to London. It gets refined in Switzerland, gets put in bars in London, and then comes back to the US. It's like that Dole pineapple cup I was telling you about. Now we're all used to that. From Mexico to London, from London to the US, from Mexico. And now it's like there's no more metal left in London. Well, where did it go? China bought it. India bought it. And the US bought it in December of this year. There's no more metal left there. So they're having a regional problem with getting silver. We've got plenty of silver. You've got plenty of silver. What we have going on in the US is a refinery problem. We don't have enough manufacturing. So we've got all this raw silver and like 2 companies, Metalor and one other company, that make it. We used to have Johnson Matthey. That was you guys, right? That's probably going to be a booming industry in Canada, refineries. If they let you make them, that's...
If once again the bureaucracy would just get out of the way, Vince. Appreciate you coming on. Your example of silver and the supply chain, I think we lived out different parts of that during COVID. The supply chains being disrupted immensely and the prices of things changing, right. and there was a lot of different industries that saw that. And what was that? Was that there was no more of this, or is it the supply chain management went through the woodshed?
It was supply chain management. Exactly. It's like the London silver market is kind of like a community basket, and everybody kept their silver there. When needed, they pull it. And then after the supply chains broke, everyone's like, wait a minute, that's taking too long. That's a problem. And slowly China and not slowly, China and they started just taking all the silver out to have it close to them, like the gold. And then the US said, hey, that's a good idea. And we did it too. Tariff or no tariff, I don't care. London's dead. We've killed London like the LME. The LME died from that nickel scandal they had during COVID, after COVID. Yeah, it's done.
Vince, appreciate you hopping on and doing this, and look forward to seeing you in person March 28th. Either way, thanks again for hopping on.